Presentation on computation of income under Tonnage Tax Scheme, presented by Shruta MCom Final. Meaning, the government has introduced tonnage tax system for taxation of income derived from shipping activities by an Indian company. The tonnage tax scheme is an optional scheme for qualifying Indian shipping company. Only after satisfying certain conditions, a company is eligible to be enrolled under the scheme. It means a tonnage tax is a taxation method which can be applied to shipping companies. In this method, the tax is determined by the net tonnage of the entire fleet of vessels under operations or used by a company. Next, tax planning for shipping companies. An Indian company operating qualifying ship or ships may at its option compute income from qualifying ship or ships on the basis of deemed income or under section 28 to 43C. Second one, qualifying ship. A ship is qualifying if it is a sea going ship or vessel of 15 net tonnage or more. It is a ship registered under the Merchant Shipping Act 1958 or a ship registered outside India in respect of which a license has been issued by the Director General of Shipping, and next one, a valid certificate in respect of such ship indicating its net tonnage is in force. Here, qualifying ship under the tonnage tax scheme satisfied the following criterias. It is a going ship or vessels of 15 tonnage or more. A ship that is registered under the Merchant Shipping Act 1958. For a ship that is registered outside the India, the license has to be issued by the Director General of Shipping. Ship should hold an effective certificate that indicates its net tonnage. The profit from the business operating using the qualifying ship will not be applicable for minimum alternative tax provisions. But if does not includes first one, a sea-going ship or vessel if the main purpose for which it is used is the provision of goods or services of a kind normally provided on land. Okay, next one, fishing vessel. A fishing vessel is a boat or ship used to catch the fish in the sea or on a lake or a river. Next one, factory ship. Factory ship, also known as a fish processing vessel, is a large ocean going vessel with extensive on board facilities for processing and freezing caught fish or whales. Next one, pleasure craft. Pleasure craft that are under 20 meters in length or a craft which is constructed primarily of non-metallic materials must be equipped with the passive radar reflector. Next one, harbor and river ferries. A harbor is a sheltered body of water where ships, boats and barges can be docked. Ferry, a place where a passenger freight or vehicles are carried by boat across a river, lake from the sea or other body of water. Next one, offshore installation. Offshore installation means a mobile or fixed installation including any pipeline attached thereto which is or is to be or has been used while standing or stationed in river in relevant water with a view to explore or exploit petroleum and natural gas. Last one, a qualifying ship which is used a fishing vessel for more than 30 days during the previous year. Okay, next, computation of income. The income shall be deemed as under first column net tonnage of qualifying ship and next amount of daily tonnage income. First one up to 1000 rupees 70 for each 100 ton. Second one exceeding 1000 but not more than 10,000 rupees 700 plus rupees 53 for each 100 ton exceeding 1000 ton. Next one exceeding 10,000 but not more than 25,000 rupees 5,470 plus 42 for each 100 ton exceeding 10,000 ton. Exceeding 25,000 rupees 11,770 plus rupees 29 for each 100 ton exceeding 25,000 ton. Note rounding of tonnage. A, if tonnage include kilogram, it shall be ignored. Next one, if tonnage is not multiple of 100, then if the last figure is 50 ton or more, the tonnage shall be increased to the next higher tonnage, which is a multiple of 100, and if the last figure is less than 50 ton, it shall be reduced to the next lower tonnage, which is multiple of 100. Next one, the daily tonnage income of each ship shall be multiplied by the number of days during the previous year and the number of days in the part of previous year in case of the ship is operated by the company as a qualifying ship for only a part of the previous year. Third one, when tonnage income of tonnage tax company has been computed on the basis of deemed income, the following provisions will apply. The provisions are it will be deemed that every loss, allowances, or deduction for the previous year under section 30 to 43B had been given full effect. Next, the written down value of any assets used for the purpose of the tonnage tax business shall be computed as if the company has claimed and has been actually allowed the deduction in respect of depreciation for the relevant previous year. Next one, no loss relating to the business of operating qualifying ships shall be carried forward or set off. Where a capital asset has been used for tonnage tax business, on its transfer capital gain shall be computed in accordance with the provision of section 45 to 51 and shall be chargeable to income tax as short-term capital gain. Last one, no deduction shall be allowed under section 80C to 80U in relation to profits and gain from the business of operating qualifying ships. Next, conditions for applicability of tonnage tax scheme. First condition, transfer of profits to tonnage tax reserve account. Here, transfer of profit to tonnage tax reserve account, section 115 VT, and amount not less than 20% of the book profit derived from the balance sheet of the qualifying ships shall be credited to the tonnage tax reserve account. Next one, minimum training requirement for tonnage tax company. First, a tonnage tax company shall comply with the minimum training requirement in respect of trainee offers in accordance with the guidelines formed by the Director General of Shipping and notified by the central government. Such company shall furnish a copy of the certificate issued by the Director General of Shipping on demand to the effect that such company has complied with the minimum training requirement for the previous year. Last one, limit for in of tonnage. Not more than 49% of the net tonnage of the qualifying ships operated by the tonnage tax company during any previous year shall be chartered in. Thank you.